Hey, good evening, everyone. How's it going? For those who don't know, this is Rick. For those that don't care, this is Joe. Hey, I want to thank everybody for being here. I appreciate it. Some of you may actually notice this is a different look. It is. It's a new room. We've changed across hit and run candlesticks and right way options. So for some of you, this is the first time you've seen it. Maybe for some of you not. So change the drapes. Yep. If you can't afford a new house, just change the drapes. How's that? All right. Let's see. Sorry. Getting my desk organized here. Mouse in the right place. Okay. Recorder is on, and let's go. Hey, Jim. How are you? I don't see you much. I hope you're doing well. Let's see. You do make the chat bigger for anybody that would like. Yeah, good question. If you just look right above you there, it should say main topic, off topic, maybe some, what are those little bubbles? And then a gear. I think in the gear is where you change that, Jim. Well, good, Jim. I'm glad to hear you're doing well and busy. Keep you off those streets, man. Yeah. Gear says search. Let's see here. Oh, boy. Oh, yeah. Maybe type font in there. Outside of that. Yeah. Hey, Sam. Sam wants to make his account bigger. Sam, if you go right up at the top there, it says main chart topic. Click on the gear. I'm sorry. I couldn't help it. I'm in a good mood today. Okay, let's get going here. Again, welcome everybody. Let's take a look at the market really quick. Three topics I'm going to touch on, and somehow whatever questions you guys ask, I'm going to try to spin it into three topics. XLE energy charts, they're rocking and hot, and we're certainly going to look at a few of those. And we're going to talk about the market. And we're going to talk about timing a little bit. I want to read something to you real quick. Timing is a big deal for swing traders. Write that down. That's good stuff. I like it. I've written it down 50 times since Saturday. I put it every day. I have I don't know what you call it. A steno pad. I buy these by the case, and every day there's a page that I turn to, I date it, and anything I didn't get done yesterday, I add it to the list today, and it just notes. And this here, timing is a big deal for swing traders. I think that's kind of important because I think timing is important. And trade when the time is right. It could say trade when the time is right for you because not everybody is the same, and that's okay. That's okay. That's all right. So what might be good for me might not be so good for Sam there. So hello, doll. Phil. Hey, Phil. Boy, Phil is in a seriously different time zone. So it's very nice to see Phil here at night, and Phil's here during the day too. So all right, so let's talk about the market here. I saw Gwen said up there that red's not her color. And she's tired of seeing all this red. So I guess the big question is, well, how much red do we have to go? Truthfully speaking, I think we could see more red, okay? I think it's very possible. And I would caution allowing any kind of, whoopie-doopie-doo candle down here to get us into any kind of a big trend. Look, I hope I'm wrong, okay? I really, really do. I truly do. Do I think we can see some really good relief rallies? You bet. You bet I do. But the truth of it is there's a whole lot to cut through up here. There's a lot of stuff up here. And to boot, one has to ask, well, what is out there in the market that actually can lead us further? We're going through earnings season right now, and I'm not sure the earnings are that great. I certainly don't see I mean, I see some beats out there, but I don't necessarily see where there's any follow through to it. So that could be a telltale sign. So until next earnings season, it could be a bit of a wild ride. So we need to be careful with that, which we're going to get into talking about timing at some point here. If you take a look at the Qs, the Qs is the bad apple, or that worm at the bottle of the tequila here. While it sounds cool to go drink the tequila when you're about 17 years old, when you get most of our ages, the truth is we shy away from the worm down there, the bottom of the tequila. And that's a lot. Well, it's possible we get down to 288 here on the Qs, somewhere in that neighborhood. Here, let me make this a little brighter for you. We'll put it right there for now. Let me brighten this one up. This one here is the 500 period moving average. Much like the dotted deuce right here, it's the 500 period front weighted measured on the lows. Okay, this line right here, this is the 500 period moving average. And I don't know, I kind of feel we're going to get down there, but we certainly, I absolutely believe we're going to see some relief rallies really kind of suck people in before they poke you in the eyeball. So be careful. And we're going to talk about timing, okay? Diamonds here. Diamonds, it looks just like the SPY in the Qs here. We've got nice little reversal type patterns. The thing about a reversal pattern, nowhere in the word reversal does it give you any length of time. And that's where we need to be a little cautious. We could see a reversal. That's not a reversal. That's a relief rally. That's just a relief rally. So we could see a relief rally till we get up into some of this major resistance up here, and then we could start to head back down. So there certainly is something tradable out there like this. There absolutely is. I just want to caution, don't latch on to this just right yet, okay? Hey, Harry, I don't even know if Ed is here, to tell you the truth. Ed was taken off tonight. Would you mind just telling them, they're over here? I would. Thank you very much, Harry. I appreciate that, okay? I really do. Thank you. Good deal. Okay, so there's a little bit on the market. A chart that I like to follow is FNGU, because this has all the big guys in it. Big guys and gals. Oh, hey, Ed, thanks. They're out of luck. They did not get it from the website. Yeah. Hey, if you're saving links, and that's what they did, not wise. Not wise, because something like this could happen. So, okay. So anyway, this is, if this market is going to turn, this is the group that's going to do it. All right. Look, I get it. There's some power, from the Dow stocks. I get it. There's power there. But what I don't get is there's enough power here to go up against FNGU, FANG stocks. There's just not enough power there. I just do not believe it. So keep an eye on this chart right here, FNGU. It encompasses the FANG stocks and a few more than just the FANG stocks. You can Google it and go find them. But this is where the power is. This is where the money is. This is the Goliath here. And if this market's going to turn, it's these folks that's going to turn it to the upside. So I think we should keep a close eye on this. All right, let's talk about XLE. And please, any questions? Man, I'd love them tonight. So, I want to show you this right here. Okay. I hope you can see everything there. I want to come down to, where is it? Here's my oil, which is energy stocks. And I want you to notice, it might be hard for you to see, but you see there's two green bars here. Look at the second one. It says 94%. Now, the stocks I have in here are certainly not all the energy stocks, okay? I'm not, that's not my goal, is to put all energy stocks in there. And the truth is, there's no rhyme or reason to what's there. Just over time, I've collected them. Same with defensive stocks. There's not, it's not like 100 stocks in there. I collect them. So if I see an energy stock, oh, hey, that's not on there, I'll add it to it. And I've just been doing it over time. You can go to the energy ETF and XLE, and you can pull out some energy stocks. Anyway, the point is, you see this here. It's 90. The stocks that I have in there, 94% of them are green. Now, this little line up here, which honestly, I rarely pay attention to this top line, okay? This is the line I like. But what this is saying up here is that out of the 94%, the average is up 4.34%. The stocks that are up, they're up 4.34%. But again, I don't pay attention to that one. This is the one I pay attention to. So what I want to point out is, let's start at this top here. Pot stocks, only 14% green, 86% red. Clean energy, 100% red. Defensive stocks, 93% red. SMH, 100% red at the close, and that was actually a little green earlier today. Payments are like WU, GPN, ALI, those kind of things. 56% green. Banks, they're faring fairly good. I like to see a 60 or 65 down there, and they're sitting at 57%. So, yeah, they're trying. Electric cars, boy, I'll tell you what, there's no plug-in for them, right? Gold, silver, 90% green. Telecom, 67% red. Crypto, 100% red. Pharma, healthcare, 82% red. Really, the big boys today was the energy. That was the big boys today. And that's one, that's why we're looking at XLE. Because truth is, we get a good move, we can certainly see a few more days to the upside, okay? Let's see, Carol, how does one make a chart of stocks like that you have? Carol, if you have the scanner, I would be more than happy to help you in the trading room tomorrow. The only reason I can't help you now is because of the time. That's all. And this goes for anybody. But if you have the scanner, you know what? Let me say something different, okay? Because I need to say something different here. Let me walk that backwards. Not everybody here that has the scanner is a member of Hit and Run Candlesticks or Right Away Options, and I forget that sometimes. I don't run, operate, or do anything with the scanner. I rent it like everybody else. I get a good deal, I'll say that, but I do rent it. So here's what I'll do, Carol, and for anybody else that's out there. I'll certainly do this for the members in the room tomorrow, but if you guys want to show up here tomorrow during the day, you pick a time. I can help you do this pretty easily. Once I show you one or two, you'll be able to do the rest, and I'll even give you my tickers. I have no problem for that at all. And I'll show you how to connect them so you can move them all around like this. But I can't do it tonight just because of time, okay? So, Carol, it's up to you to remind me tomorrow. That's your job. And anybody that comes into this room right here, this is the free room. Anybody that uses live trading alerts, I'll be more than happy to help you do that, okay? If you like to watch sectors, it's the bomb, I'm telling you. Okay, let's move on. Where are we here? Nancy, The link of the email must be an old cookie. Could be. Rick, let's see, Rick is asking, for the scanner, I think we all get a good deal. Oh, I think so too, Rick. Thank you. Ed, need to take care of Rick there. Okay, so I'm looking at XLE here, and man, that has been popping up on these two scans, just killer. And you got to admit, I mean, look, you may not trade $65 stocks. I don't know. Maybe you don't trade ETFs. I don't know. You may not even trade stocks that's in uptrends like this. You may be, always playing with the bottom here. But as a swing trader, you got to admit that right there is about the prettiest thing you've seen in a long time. That's just a pretty chart. And those energy stocks, they're rocking. So let's just kind of go down. We're going to look at some of these. You can put them on the watch list, set them up. We'll talk about them if you want. If you want to talk about one, please post it in there. I'm not going to talk about every one that I see here. So if you have one you particularly like, let's talk about that. And then that'll really lead into timing. So Jay, any time tomorrow, yeah, just come on in. I'll help you. Yeah, I'll help you. And not at the open, okay? Not at the open. Don't do that. So let's take VLO here. VLO is coming up on this scan right here. These are kind of similar scans. Look how this thing has rallied up. It pulled back, tested the 50 period moving average, the 200, and the dotted deuce. And I want to make a big boom. Notice its earnings in a couple days. So for some people, this might not be the chart for you, okay? For those that don't know, these green dots right here, this is the Trendicator. The red dots, that's the Trendicator too. And I like to trade long when price is above the Trendicator, green, and I like to trade short when price is below the Trendicator, red. So as we rally up, we pull back here, we find some support, a little bit of a hammer. Buyers are coming in. Notice the green dots were back above the Trendicator. It's also above the T-line. Now, we can't call this a 3/8 trap. Let me make sure of one thing here. Okay, we're good. We can't call it a trap because the 3 EMA is not up here. But let's not throw the baby out with the bathwater, okay? All a 3/8 trap is, take note here, take note of this. All a 3/8 trap is buying a chart close to the T-line. That's all it is, okay? So we're pretty darn close to the T-line, wouldn't you say? All right, so if I'm going to look to trade this tomorrow, which I'm not because of earnings, then you see that low right there? I'm going to have to look for something up in this area right here. So what I'm going to need to see is, a rally, pullback, test, a rest, test, something like that, and then buyers, and then I'll be interested in trading it. So I said I wasn't going to trade this because of earnings. There's another reason why I'm not going to trade this. And this, I didn't plan this at all. It just sort of led right into timing, okay? I want to talk about something really quick. Work with me here, okay? Work with me. Bear with me. There we go. When we're looking at charts, it's all about conditions, okay? Pretty big boxes there, Rick. For instance, if you're into the, let's go to XLE, okay? There we go. All right. If you are into conditions, which I think most of you are, even though, in fact, I would say 100% of you are. You may not realize it, but you are. And here's what I mean. If you are all into candlestick signals, well, that's a condition, okay? If you're, don't click so many. If you're into the 3/8 trap, Well, that was certainly a 3/8 trap this morning. That's a condition. So you see, no matter what, we're looking at conditions. If you're into stocks that just simply rally and pull back, to heck with any kind of T-line or 3/8 trap or anything, well, that's a condition. If you're into some sort of a trend, that is a condition. So we want to put as many conditions in order as possible. All right. So I'm going to do this really quick. J hook, I like that. That's one of the chart patterns I like. 3/8 trap breakout, I like that. Trend, I like that. Trendicator's green, I like that. No overhead resistance, okay? I like that. Here's the problem. There's one condition that it doesn't meet, and this is timing, okay? Now, a lot of you have heard me, I've been talking about this till I'm blue in the face here since the first of the year, is timing. And I get it, we want to trade. I really do. Remember our notes here? Timing is a big deal for swing traders. And here's the big one here, I think, for this right now at this moment. Trade when the time is right for you. Okay? So, there's 234 traders here. Every 235 now. 235 traders can be divided into several groups. All right. Some traders can be divided into what maybe we could call an ace trader. You know what? They're doing a heck of a job. They're happy. They're content. They're making good money, but they're always striving to make more money. They're successful at trading, and you can decide which group you're in. I'm not going to put any numbers on it because that's not for me to put numbers on that. And then there's the trader that is struggling to no end. And then there's all these groups in between, okay? So, timing is important. And if we're down here buying this, keep in mind, we are headed. And while we are definitely set up for a relief rally here, I can see that. We are headed right up into resistance, major resistance up there. And that leads to, maybe not that big, that leads to a pullback. 9 out of 10 times, this is what's happening, or what will happen, okay? Now, there's always that time when you get this so-called V-bottom, I hear from people. V-bottom, no, that's not what it does. What it does is does this. So it'll come up like that, and then it'll come back. Well, that just shot the crap out of your V-bottom right there. And then we do this. So all I'm suggesting is be cautious of this little move right here. And this is a tiny, tiny, tiny move. Is it worth 5%? I think not for probably 95% of the traders in here. I'm going to say it's probably not worth it. So make sure the timing is right. And here's what I like to do for the timing. In fact, I'm going to show you something right here. See this? Let me make it stay on top. See that right there? It says 0. It says 0 because I can't trade. I can't trade because, and don't get me wrong here. It doesn't mean I'm not going to take a trade, but I'm not going to jump in with both feet. Not going to get my hair wet on this. I certainly may take a trade to the long side, very possible. But right here it says 0. Let me show you something in here. There's 120. I don't know if you guys can see that right there. There's 120 that meet all my conditions. 120 possible. this group right here. This is the big group right here. But there's one group here, this one, 0 passed. Okay, so what I'm waiting for is the right condition from me. Okay, and the right condition is, let me move this back out of the way. The right condition is when the market is on my side. See those green dots? I don't want to go long when I'm underneath red dots. I want to be on top of green dots. Now, this for those that don't know, we call it the Trendicator. It's not a secret. It's nothing more than the 17 exponential moving average. You can actually use any moving average you want. Don't get married to the 17. Don't get hooked on it. You know, I mean, you're more than welcome to use it, but what you're doing is you're putting your trading world around that. I know a lot of people that use the 21 EMA or the 20 simple. I know people that use the 10 simple, the 15 simple. I mean, it just really, it's what you want to do and where you want your comfort zone to be, okay? So what I'm waiting on, and it's painful. It is. I might miss out of a whole lot there. Like I said, there's 120 stocks that meet my criteria, like XLE or VLO or MPC or, I don't know, I'm just looking here at those, LVS maybe, TS, PM, and we'll look at those. But I'm holding off because this year, this is the year that I am going to try my darndest to stick with some crazy rules. I just think it's safer that way. And yeah, I just think it's safer, okay? So that's what I'm waiting for. Now, that doesn't mean that I could change my time frame. I really could. Watch this. 3-bar chart. I'm going to turn this off. There we go. Look at the 3-bar chart. We're not there yet, are we? But wait, here. Let me show you something. Let me show you. Let's get rid of all these lines right here, okay? So first thing you have to understand is if we bop around here for a little while, even if we do this, if we pop up and pop down, these little red dots, they're going to drop and get closer to price, okay? So it's not like you're really waiting for that one right there. This will drop down as price just bebops around. Now watch this. Let's put a line right here, right through that one. Now let's go to a 3-bar chart. Whoa, what just happened? So if the 3-bar chart, if that was to turn green, I could trade based on the 3-bar chart. That means the market must hold a 3-bar chart green dot line right there. If it doesn't, then I've got the weight of this Goliath on top of me. And that's no good. You don't want this kind of weight sitting on top of you. But wait, what if we take this to an hourly chart? Look at that. See how we've dropped down right there? Look how we've dropped down. The hourly chart actually at one point today did give us an alert to possibly go long. Absolutely. Check out the 15-minute. Look at the 15-minute. Look where it went today. Boom. See how it started to turn green and we broke out here? So right in there would have been a good place. Nice little run on the 15-minute chart. Here's a little pullback. Yes, we've got a red dot there. End of the day, I don't know if I put a ton of weight on the last few minutes of the day, but the day. So you see how timing, this is timing. Wait for the right trade. Wait for the market to be on your side rather than just look at the market and say, hey, we have a hammer here. Big deal with a doji, because the truth of it is until we clear that hammer and that doji, then you got nothing. In fact, there's way too much risk of downside right now. So, and again, we may see that rally, but there's too much risk to the downside. So yeah, if you just have these visual connections with the chart, I believe they can be very, very helpful to you, okay? All right, let me grab some questions here, and then we'll take a look at some more of these charts here. Ron is asking, what is the T-line based on? Price. The T-line is the 8 exponential moving average. That's all. That's all it is. The 8 exponential, and it's the average of the last price. Yeah, just the 8 exponential. Let's see, Mike, are you using, and if I missed a question up there, please post it again, okay? Are you using SPY for basis of all your long trades? The SPY is my market, okay? There's a lot of people that follow IWM. There's nothing wrong with that, nothing at all. A lot of people that follow diamonds, nothing wrong with that at all. But the SPY is what I follow. I also follow that FNGU or the Qs. I could go, to tell you the truth, I could go an entire week, sometimes 2 weeks, never look at IWM and never look at the diamonds. Everything I need to know is right here. Did I answer that question? Let me make sure. Yes, so I use the SPY for the basis for all my trades. But keep in mind, I do look at that FNGU chart and pay really close attention to the Qs. Sam, I noticed 17 EMA, 15 M equals 8 high. Sam, you lost me here. I don't know what 15 M means. And then you lost me on that one. I don't know what that code does, to tell you the truth. Let's see, Larry is asking, but then you have to stick to that time frame, correct? Not necessarily, Larry. So here's what Larry's talking about. If we jump down to, say, an hourly, because to be honest, I'm not going to, in the current market condition, which is, I think, worse than horrible, I'm not going to trip over myself on the 15-minute chart. However, I might trip over myself for the hourly chart. So what we don't have to stick with the hourly. You don't. And here's why. Because let's assume for a moment it's all working for you, okay? Now let's close that up. And then you close up again. Oh, wait. What was that line right there? Wasn't that the 3-bar chart? We just went up in time frame, right? So once we clear that, now we can switch to a longer time frame. You don't have to use the hourly. And then if we climb up higher, and if we can get through this one, wait a minute, that's the daily. That's the daily where we are right now. 3 days from now, it's going to be down here. It will be down here. So as long as the time frames are showing positive trading and we're getting through all those little areas, then what's happening is, so here's a 3-bar chart. If that one was green, okay, we close green, and then we go to the 3-bar chart. Well, we would take that out, right? And then if we continue to move, then we could go to the daily, and it would take the daily out. But remember, if price is floating around down here, it can even pop up, come back. It can bebop around here all at once. What's going to happen is these red dots are going to fall on the daily. They're going to come down and meet price, or price is going to meet them. It's kind of a group effort. So what happens now is when it happens, that's not quite what I wanted. There we go. When it happens, can't predict when, then what's going to happen are these dots are going to turn green. What are we after? We're after this right here. Okay. Now I want to show you something. Take a look at this chart here. And let's go back to the daily. And Yeah, let's leave those there. So what are we after? Let's look at these indicators here. Notice there's no price on here. You don't need price on this chart. The yellow line represents the 3 exponential moving average. The white line represents the 8 exponential moving average. And the dots, red and green, represent the Trendicator, or I use the 17 exponential moving average, okay? Let me finish this and then I'll change this and you'll see how that changes. So what is it I'm after? I'm after this right here. I want the yellow to be above the yellow above the white above the dots, and I want the dots green. Okay, so let's take this. We all know where this is on the chart, but I'm going to put a line here, okay? Whoops, that was the wrong line. Try that vertical one again. There we go. This is the area that I want the market in my favor. I mean, does that look like it's in your favor? I don't think so. I don't think so. Now let's go look at this. Look at that. So based on the SPY in your favor, we could trade all kinds of charts with the market, what I call my market, moving up. You can do the same thing with the Qs or the diamonds, anything like that. Okay? You just I realize that there will be some missed trades. Whoops, that's not going to work. I realize there will be some missed trades. I get that. But I would bet money. I mean, I would, and call me out on this, okay? Call me out on this. You go back and look through your trade records of last year, okay? Pay attention to your winners, and pay attention to the losers. And we are only talking long right now, okay? So pay attention to your winners, pay attention to your losers. Your winners, go put a check mark by it if the dots were green. Okay? Put a great big check mark by your losers if you went long and if those dots were red. And I will bet you, and call me out on this, spend a few days doing this and call me out on it, please. But I will bet you that the majority of your losers were playing this kind of game, where the market was actually against you. Whether or not you're playing some pick the bottom game or, just because we dip down, I'm not going to call that right there bottom picking necessarily. But that market is against you. Why would you want to be long? You don't. There will be a crazy amount of charts that you could say, well, this one looks great. You're right, it does. But are all your conditions met? And if they are, okay. This does not have to be one of your conditions. But I do believe your trading will improve if this is one of your conditions. So if you're trading short, you want that red. If you're trading long, you want that green right here. So give this up, or maybe play it smart and look for those maybe an hour or a 3-bar chart. I would stay away from the 15-minute, tell you the truth. Look for the hour. If you're into the 3-bar chart, I'm into the 3-bar chart. That's a 130-minute chart is what it is. And you can play that. But just keep in mind, it's not this that you have to wait for. Let me get rid of some of my arrows here. There you go. It's not this that you're waiting for, because this will trickle down as price bases out. When price bases out, I made those definitely the wrong color, didn't I? And then we break out, then they will change that color. And you think that's not going to happen? You guys see that? Look at all that green, itty bitty red. Look at that green, itty bitty red. 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 Green. We could look at this till we're blue in the face. or green in the face, or red in the face, whatever color you want to be. Okay? So it's just something to think about. Something to think about. I know a ton of people that got long today, chased all this. I hope it works out. And we are set up for a relief rally. I think we are. T2122, we're down at the bottom. We're bouncing up. You know, it seems to be working. But we know how bottoms are formed. There we go. Oh, come on, Rick. There we go. We know how bottoms are formed. We're all adults here. This is not our first rodeo. Bottoms just in the market just does not happen like that. It just does not. Somewhere in here, you're going to have a pullback. And that's going to freak you out. And what's going to happen is that's going to throw your timing off. So start in time. Look at those dots. Look at those dots. Start in time, and that helps you stay in time. I'm going to have to write that down. Start in time helps. That's all I need to write. That's a good line. I like that. Okay. Sorry to spend so much time on that. Let's see, Jim, the T line, trigger line. Thanks, Jim. Appreciate it. Phil made an after-hours volume of 13 million shares and went down to 269 before going, let's see, Microsoft. So I don't know that this is really going to show anything here. Yeah. So what'd you say it was going up to 294? All right, we're at 294. So I guess Microsoft had earnings, right? So based on this, and I don't care if they had good earnings. I don't care if they had bad earnings. It does not matter. What matters is what investors think. And based on the chart that we have in front of us at this second, I have no idea, nor can I even remotely guess what Microsoft is going to do tomorrow. But we can clearly see it's in a downtrend. So from a timing perspective, do you really think this is the best time to buy Microsoft? I mean, seriously, if Microsoft is going to go higher, then there it is. Then it's going to go higher with pullbacks along the way, which means there is going to be ample opportunity to buy Microsoft. Ample opportunity. Gazillion opportunities. Get in. What did I write? Start in time will help you stay in time. Start in time. Yeah, by the way, this doesn't, you can look at any chart you want to. It doesn't have to be the SPY, the diamonds, the Qs, anything like that. Just look at Microsoft. Start in time, and it helps you stay in time. You start down here, you're starting out of time. Again, I am really trying right now to talk to those folks that aren't 100% or 99% satisfied with their trading. If you are dissatisfied with your trading, think about the timing. Picking bottoms never got you anywhere. Get in time. Get in time. And by the way, you don't have to buy it here. Long as it's green, you're in time. Now what you're doing is looking for the setups. We like the 3/8 trap type setups or the rallies and the pullbacks, those type of setups. But get in time. See, that's what I've done to a lot of my alerts. I've set them up only to be in time. This one right here is set up to only be in time with the daily. This one is set up to be in time with the hourly. It's the exact same one as this one, except it's for the timing, just the timing, to be set up with the hourly. So just what I showed you, where the SPY turns the red dots green. That's what this one's set up for. This one's set up for the 15-minute right here. Notice how this one has 0. That's because I'm not in time on the daily. See how this one has, it has 0 right now because it's below. We saw it earlier. It's below the trend indicator. Trend indicator's green, red. The last one that it triggered, when there were some in there, was Val. Here's the 15-minute. We're still good, and it might not pick up after hours here. I don't know for sure if it would or not. There was 38 in the hopper based on the 15-minute. 15-minute being green. So timing. Think of the timing. Let me put this back here, okay? Before I lose track of it. There we go. All right. I got some questions here. Let me grab these. Thank you, Phil. Appreciate it. Let's see. I noticed 17 EMA as 15-minute chart is the 8. Oh, okay. I see what you're saying. Yeah, approximately. It's pretty close. Yeah. Yeah. Thanks, Sam. Appreciate that. To be black, not white. Phil. Let's see, Will. Why not go short? You don't like to go short? I love to go short. I go short all the time. Okay, I love to go short. And when we rally up, in fact, I talked about this in the room today. What I'm looking for is that I'm looking, oops, let's go to the SPY here. All right. What I'm looking for is the market to rally. Give me that relief rally. And then what I'm going to be watching for is another short setup. But what I don't want to do, and there's no way in heaven's name I'm going to short something with a hammer. That's just foolishness if you ask me, Will. So I'm not going to short it here. What I'm going to do is I'm going to wait for that setup. So give us that relief rally, and then I'm going to watch for that short setup. And then, yes, I'm going to look at a short. Timing, Will, timing. This is not the time to be short, in my opinion. Based on my timing, my Trendicator, my timing indicator, we have been we've been underwater for 1, 2, 3, 4, 5, okay, maybe not that one, 6, 7, 8, 9, 10, 11, 12, 13 days. Which direction do you think is the logical place for this to move in the very short term? And I would argue relief rally. So this is not the time to be short. This is the time to be getting out of those positions, saving your money, waiting for that next entry. And remember, we're swing traders here. Swing traders. Short-term swing traders. So yeah, I love to short. Dan, can you reverse that and go short? You know, you can. You can. Let's take this right here, this scan, okay? Let's take this, and where is it? And let's take a look at this and stay on top. There we go. This is the opposite of this one right here. So let's take a look at ZI. So yes, you can set it up to go different. So take a chart like ZI. You've got a bullish engulf, a doji here. There's no way in heaven's name I'm going to short that. However, it's in the area. What I need is a little bit of rally or just simply show me that the sellers are still there. That becomes a short setup. Take a look at SHOP. Look at SHOP. We've got rally candles here, relief rally candles setting up. No guarantee they're going to relief rally. I just need them to rally a little bit, give us a more of a signal up here, maybe closer to those red dots. Timing, closer to those red dots maybe. And then that might be a short. Game. We've been talking about GameStop being short. Well, I think a lot of people have. A lot of people have, I guess. Look at that. All I need is a little bit of bounce. I don't know if it's going to bounce tomorrow, though. Don't know about that. So, yes, you can absolutely do that. And this is the exact opposite of this one here. So, yes, you sure can, Dan. Let's see, Cliff. Using your criteria, why didn't you short the SPY 6-7 days ago? Because I just got out of the market, Cliff. That's why. There's Cliff. You have, and everybody here. Fair question, Cliff. Very fair question. There's a lot of things I do here. Okay, I run right way options, and well, I run part of right way options and all of hit and run candlesticks. So I do a lot of stuff here, a whole lot of stuff. And sometimes it's better for me just to step back a little bit. There's somebody not here, at least I've not noticed that they're here, that I respect like crazy, okay? Super trader. He's a member of Hit and Run Candlesticks and Right Way Options, and he posted in the room the other day, I'm taking a week off. This is not my market. Members, you know who I'm talking about. This is not my market. So 6-7 days ago, I took a look at what I had to do, which also gather up tax stuff because you got that time of the year coming, seeing how I'm taking a week off here come up near Valentine's Day. So I've got to start getting things kind of rolled up. And just out there to trade because I have 6 monitors and a keyboard and a mouse and an account, I don't have to trade all the time. So I have to know when it's my time, when the right time is there. So I saw the market getting ratty. We all saw the market getting ratty. I said, you know what? I'm going to take some time here and just get other side of my business done. So very fair question, Cliff, and I hope that explains it to you. And with that, I would like to leave it with this. Guys, gals, you don't trade because you have a monitor and a keyboard. You don't trade because you have a trading account. You trade when trades are in your favor. When you feel you have an edge, that's when you trade. Now, granted, the SPY, what a great time to be shorting, right? But I saw also a great opportunity to get some office business done, get prepared for my week's vacation I'm going to be taking here shortly, and just do some things. Yeah. Anyway, thanks, Cliff. Appreciate it. Rick, do you use the Qs as a market for tech stock or just the SPY? I use this. Here it is. Number 1, T, is the SPY. Number 2 is FNGU. Number 3 is the Qs. There is no number 4 and number 5 for me. I will watch IYT, the transports, yes, and I will watch SMH, semiconductors. But those don't fit 1, 2, and 3. Okay, there you go. Phil laid some shorts out that, oh yeah, Piton. Anybody see a $3 stock, or is that just me that sees a $3 stock? That's a joke, actually, okay? That's a trading room joke that we have going on. But Piton, well, that is a beautiful looking short, by the way. Hello, Michael. That's a really good idea. I have a spreadsheet full of trades that I could check from last year. I have never heard of these ideas back then. You know, Michael, sometimes I know myself, I know Doug, I know Ed. Sometimes we'll wake up, and I've talked to these guys, so I know this for sure, that we'll wake up in the middle of the night, 2 o'clock in the morning, go turn our computer on because we have an idea and can't sleep, and we'll work the idea. That's how the volatility was created by Doug, right here. He didn't invent or create the volatility stop. He did not do that. But what he did is he put it in a way that we can trade with it. Okay? One night, and I'm serious as a heart attack, one night in the middle of the night, I got this bright idea. I got here in front of my computer using the volatility stop, and that is exactly how the Trendicator was created. So you know, we're always growing. We're always learning. We're always trying to make things better. I don't think Ed is here. I mean, if he is, he can attest to this 100% on how many crazy, lame brain ideas I have come to him for the scanner. I have called him up. I have pestered him till I know he wants to hang up on me. But he will build every scan I ask him to. And some of them, and I'm sad to say, some of them turned out junky, not because of his work or live trading alerts. It was just a lame brain idea. But you go through these ideas until you find one that works. So, thank you, Michael, and we'll leave it at that. Thanks. Fed tomorrow. Will, you are right. You've got some Fed news tomorrow, so be careful. Be very, very careful tomorrow, yes. 8 is the Trendicator. No, BC, I use it here. I was going to show you guys this. I don't think I did. So let's go look at the SPY. So here's the SPY, and the red-green Trendicator here, that's what I call it. That's the settings for anyone that has TC2000. And you see my data source is the 17 EMA. See that right there? So I'm going to just close this, okay? See where we are here? I'm going to go over here to the 17 EMA, and I'm going to edit that, all right? I'm going to, let's just watch these red dots here, okay? I'm going to change this to the 18. Did you see it move? 19, 20, 21, 22, 23. See it going up? Here, I'll make it go down. Let me go down a lot. In fact, there we go. The white line is the 8 exponential moving average. The red dots is the 9 exponential moving average. So I can go the 8. It gets a little wacky when you get on the fast. It doesn't line up exactly, but it's close enough. There's the 7, 6, 5. There's the 3, and this is in fact the 3 moving average, 3 exponential moving average. Okay, so you can use whatever magic. You can use a 50 if you want. Whoops. Did I do that? Oops, wrong one. Go back to this one. There we go. Yeah. There's the 50 period moving average if that trips your trigger, if that's what you want to do. And I'm all thumbs up if that's what you want to do. So it's just a moving average. The cool thing about it is that because of Doug's creation, I was able to put together, and it was just an idea. I had no idea that it would work, is use the data source, and we had to change the numbers here. I used 10 and then 0.10, and it tracks that moving average, the data source that you use. So that's all it is. Thank you for asking, by the way. Let me change this back before what it did, before I go forward. Otherwise, it's likely to scare me. Let's see here. Thanks, Dan. Let's see, IBN. Hey, Hugh, how are you? He'll, IBN for the night almost. Banks moving down. See, we're under the Trendicator here. To be long, for me, this has got to be up here. Giving up this bottom right here. Earnings, early February. And right now it's short. I have a problem shorting this because if you just stand back and look at the chart, the whole thing really is still trending up. So I have a problem shorting this right here. It's also at the 50 period moving average. I don't think it's wise to short there. Below there maybe, but not above there. And then what was the other one there? WU. That might be bullish, yeah. Look, nice day today. That's part of those credit card services. Payments. Whoops. Hold on. Payments. So in the payments sector area, it wasn't great. 44% green. I like to see 60 and 65% green. That means they're all kind of working. That doesn't mean that one or two can't start popping things up, and you can see WU right there. It's starting to work a little bit. So let's go take a look at this. So just take a look at the Trendicator. Look at price. Doesn't it make sense? I mean, unless you're just an early buyer, doesn't it make sense to be a buyer over 1830? Also, you'd have a bullish engulf with follow through. I think that's a plus. That would be a rounded bottom breakout. That's a nice chart. I'm going to flag it. Earnings, early February. Good enough. Yeah. Well, there's still a trade there. Thank you very much. Yes, there'll be a record. Yes, I am recording. I had to look. Yeah, it is being recorded. Let's see. Will, what are your preferred time frames do you use? Daily is your main time frame. Is something smaller is your trigger? Do you watch draw the line candles as your trigger? Do you adjust the time frame, go by the stock, look in historical? Thanks. First of all, my preferred time frame is the daily. Do I look at other time frames? Yeah, I look at the 3-bar chart. I look at the hour, and I do watch the 15-minute. Do I trade by those? Nah, not so much. You know, let's do this, okay? Let's do this. I want to bring this over just so you can see it. Why does it keep doing that to me? It only does it on this monitor too. And let's take a look at these charts over here. See, this says 0. So that means I can't trade. All right. So let's look at these charts. We know those charts are pretty good, right? I mean, these are nice charts. I like VLO. But I can't trade this until this is not 0, because then the daily chart will have met my conditions. I admit I will rush this a little bit if, now remember, we're still looking at VLO on the daily chart, okay? I'm still going to trade this on the daily chart. If this starts triggering, this means that the SPY has moved up over the Trendicator and turned it from red to green. I can use the hourly if I want to, and I will do that. If the hourly starts to trigger, then this just will tell me that the market is doing what I want. This is telling me that each one of these stocks are doing exactly what I want. Now, I may like some better than others by visually looking at them, but I'm going to go by this. So what I'm going to do is I'm going to watch the SPY maybe on a 3-bar chart if it turns green. And did I take, well, let me make that never. There we go. Look how close we are. So why get my panties in a wad here trying to grab this bottom when I would feel much more comfortable? And seriously, folks, seriously, you guys all got to see this. You got to all see that this makes sense. Now, you may not use it, but you've got to see the logic in it. I truly believe that. So why do I want to get my panties in a wad down here, trading underwater, drowning? Why not wait till it turns green? And then I have the market working on my side in this time frame. I can look at an hourly if I wanted to. And at one point today, and I posted that in the room, that the hourly started to trigger. Those that have the app, by the way, members, I also posted on the 15-minute. I believe I posted that the 15-minute chart gave us a buy alert on the SPY right through here. So the daily is my true choice to trade. I will move things to the hourly if I need to, like the market working. And I will admit I love the 3-bar chart. I do love that chart. And I will trade that. And if I do trade that, say take the SPY here for an example, low, and you guys all know this, low, high, whoops, better put that down there where the high is. Low, high, higher low, we have yet to make a higher high. So if we would have broken out today, right here, if we would have broken out and closed, by the way, it's got to close there, then this becomes the tradable bottom. This is not a tradable bottom in my opinion. Again, just my opinion. This is the tradable bottom. I hope that made sense. Great question, and thank you. Let's see. Gwen, all of these stocks on my watch list are in the red. I'm not buying anything until... I hear you, Gwen. I hear you. I do not believe that this is the right time to be shorting the market. Absolutely do not. And I do not believe this is the right time to be buying the market. I think that there's too much risk of a rally up for the shorts, and that is going to hurt some people, not all people. And there's too much to go long. I'm going to need to see a setup down here. And there is not a setup. A hammer and a doji by itself is not a setup. Whew, thank you. Let's see. Let's see my interest rates on the high horizon. I think keeping XLF on the radar would be good. I totally agree with you. Absolutely agree with you. So let's clear this off. Let's take it over to this chart, okay? Now, just looking at that chart, let's get this out of the way. Just looking at that chart, can you guys see? Let's change it to a 3-day chart, if I can. There we go. There we go. And all I did was make it a 3-day chart, not for any value other than to visually see the whole thing. That's all. That's all. So take a look at this chart. And I totally agree with you, Mai. Absolutely. Look at that right there. I'm sure some good trades could be found on that, in that. And you've got the market, or you've got the chart trending nicely above the Trendicator. Nice and green. Here, you can clearly see that you get some choppiness. And if you look at the chart with price and action on there, you're going to absolutely see it. So, with that said, let's do this. Let's see, will this work? Nope, that won't work. So do this one. We'll make it red. There we go. I can't move this around, so we'll just leave it right there. I'm pretty close. I'm close enough. I can't. Once I have it here, I can't move it. I'm stuck. So what if we were to just give this up? Who cares about trying to catch this? Interest rates are going up. I'm the smartest guy in the world. Not really. So you know what? I'm going to pile in here. Well, I hope you're right. I hope you're right. I think you'll be right. But why not wait? Why not wait till it breaks out, test, and then you've got a nice trade, Trendicator working. Everything's working with you. The wind is blowing in your direction. Your motor is working here. Everything is going great. Front tires are going forward, and so are the back tires. It's a real hard way to trade when your front tires are going front ways and your back tires are going backwards. That's another one I better write down. So anyway, I totally agree with you. Absolutely. But timing. When is the right timing? When is the right timing? And some people buying like crazy right now. If that's your timing, knock yourself dead. Let's see, Michael and Gwen. Ray, for those who don't have this software to change the red and green Trendicator, you can imagine the color is a function of price relative to 17. Yes, you're exactly right. When price greater than the 17, imagine the color is green. Conversely, when price is below the 17, imagine the color. Absolutely, Ray. Absolutely. It's just a moving average is all it is. No trick. And what it is you're building your trading strategy around something. And you know what? Let's go to this chart right here. And my trading strategy is around the 3, 8, and 17. 3, 8, and 17. It's like that all the time. 3, 8, 17. Now, with that, what's wrong with building into a scan or something? You don't have to have it on your charts. What's wrong with building the 30 period moving average trending or the 50 period moving average trending? And by the way, trending can be like this. You know, what's wrong with having stuff like that built in the background? So when you look at a chart, you don't have to focus on anything but what your world is, because everything else is done for you. Whether you have this piece of software, or whether you use TC2000, or whether you use Thinkorswim, or TradingView, or any program out there. Yeah, everybody's a scan writer. Everybody loves to do it. Tinker with it anyway. So very true, Ray. Thank you very much for pointing that out. Let's see, Dan, when you are looking for buyers to step in, is there an amount of time or volume on a price that will trigger you? Let's go look at that. And let me start with your last part of your question first, middle part of the question, volume. I'll tell you, this is my volume. I could never look at this and I'm okay. Not ever look at it. Truthfully, why I have it here, it's a space filler because the chart looks wrong without it. It's a space filler. Notice I even have my chart tightened up this way. I don't have it up like that. I have it tightened up so it's all right there. It's just a space filler for me. So great question here. Let me go try to, let's do this. For those that don't follow the watch list, I put it out every day. I do updates to it. So this is the running watch list right here. And let's look at APA. So let's just, oh, darn it. I forgot I can't do that. Hang on for a second. Let me grab this thing, move it over. There we go. So I'm going to look at this over here so it doesn't go behind the chart. So here's APA. If everybody will bear with me just for a second, okay? I don't want to pretend doing this. So let's do this. Let's get rid of all this stuff right here. Bear with me. And by the way, could somebody draw a line down there for me? Otherwise, my wife's going to come yell at me. I need to go. So, let's get rid of the 50. Okay, there we go. So, in the way I look for charts, it's here's my conditions. I want to see the Trendicator green. I want to see a rally and a pullback is what I want to see. I like to see longer moving averages trending. In fact, one that I've been using lately, I'm working on I'm just working on a scan is what I'm doing, and it incorporates the 20 period moving average rising and the 50 period moving average rising that you don't see on the chart. Now, on my charts, I do put the 50 up, but you don't see the 20 on my charts. But I have it built in. And I have it built into everything I look at that I want. No, I shouldn't say everything. That's not true. But I do want the 17 rising like this. So after that, I don't need to see anything else. And as far as volume goes, I don't trade volume. I trade price. It took me forever to connect a few dots, okay? You see that candle right there? That's big, isn't it? Right there. You know what? You don't need volume to tell you it's big. Candlesticks are about is there more buyers than sellers, or is there more sellers than buyers? A doji, it's a 50-50 split. Indecision is what it is. So when I see a candle like this, big candle here, big follow through, I don't need volume to tell me it's moving up. There's clearly more buyers than there are sellers. Now, don't get me wrong. If you want to use volume, and I know there's a lot of volume traders here, and I think that's a great idea. I mean, you should use what works for you. So what I'm going to do is I'm going to look at APA here, and I'm going to say I see a nice trending chart. I see a chart that is obeying the type of rules that I like. I see a chart that's getting all kinds of bullish. I see a chart that has a future. This is what I want to be in, just like that. How? And these are charts that's been on our watch list. If you check out the YouTube videos every day, you'll see that I update the watch list every day. Look at how. Isn't that doing exactly what you want it to do? And no, that's not too late to trade that. Not at all. Just set the trade up where it is. I don't need volume to tell me that it went from here to here and from here to here. So what I'm trying to say is was it Dan? Oh, Dan that asked me this. What I'm trying to say is we go to webinars. We start out trading. One day we wake up, we want to be a trader. So what we do is we go gather all the information we can possibly gather that's free. Then we go gather information that we pay for. And then we have all this information. And all this information, information can be moving averages up the yin-yang, volume, stochastics, RSI, MACD, Bollinger Bands. Before you know it, your chart looks like a mess. And how in the heck can you possibly get all your conditions to line up with all those indicators? In fact, I would argue that you can't. It's impossible. Impossible. Because one indicator will contradict another indicator. The price moving up, I've seen price moving up and volume declining. We've all seen this. Price moving up and volume declining. So what are you going to do? You're not going to trade that? I've had people say, well, this can't go up any higher because the volume is declining. 1 week later, well, this can't go up any higher because the volume is declining. Another week later, this could go on for months. Well, it can't keep going up. The volume is declining. We can show you charts that it does. So all I'm saying is be careful with the indicators that you have because they will begin to contradict each other. And then you start questioning your trading. You start questioning your trading. And that will just kill you. That will just kill you. So some things that we like to do here, I'm going to reach out a little bit. Here's AU. I like to trade the 3/8 trap. So I see that the chart is sideways. I can clearly see that. I see this candle right here. I see the pullback. I see the doji. I see that candle. We're in the 3/8 trap. I'm thinking this is a buy above $20.78. I don't need anything else. I don't really care what MACD is doing. I don't really care what Bollinger Band's doing. I don't care what ADX is doing. This is what I'm trading. This is what I'm trading. Now, if you use any of those, and I will admit that on some of my scans, I do have MACD. Just all I'm asking it to do is that it's showing bullishness. That's it on the MACD side. Let's go look at another one real quick. How about DKS? This is just coming up on another scan that I have. Look at DKS. What more do you need in this chart? What more? You don't need volume. You don't need anything. You've got a nice trend here. Actually, what I see most in this now that I look at it here, a nice consolidated box right here. I see the possibility of getting up. I'm going to go right here, right to there maybe. So with a buy, say somewhere here up, there's a 10.35% trade if you're counting pennies. So you can build everything you want in a scan. I think that is great, a great idea. To give you some idea, look at the conditions. And I'm just going to fly through this. I'm not going to stop and look at every one of them. I've got moving average relationship, price relationship, rising moving average, a bullish candle. I want it above the cloud. Market cap. In group 2, I've got price relationship again. Group 3, this is either a trap, a 3/8 trap, or a 310 trap. All those conditions built into the chart, into the scan. And really, is this still clean? This is the only chart I need to really look at right here. You want to clean things up? There you go. So let's look at a few charts here. Here's a GLD. That's on one of the scans I have. Look at GLD. What do we possibly need to tell us that GLD is a trade or is not a trade? What else could help us? And I just don't believe there's too much more out there that's going to help you than that right there. One more, and then we need to move on. Here's a chart I'm stalking. Look at TAC. Look at that. What more do we need in that chart? What more could help us there? And again, I would argue, I can't imagine what more. And don't get me wrong. There's a lot of indicators you could put up here to help you get to it. I mean, here, I'll show you. Let's see. No, that's coming up on my watch list. So this came up on an obscure scan somewhere, and I put it on my watch list. I can tell you that it probably, I see a rounded bottom breakout, a 3/8 trap, that kind of thing in there. So I can tell you that it may have come from one of those right in there. And then I put it on the watch list. So anyway, I hope that was helpful, and thank you. That was a great question, by the way. Let's see. Oh, and by the way, I didn't answer one thing, and I'm going to answer right here, or even price that will trigger your buy. So let's take a look at this TAC here, okay? What's going to trigger my buy? Number one, the market stinks right now, okay? So let's keep that in mind. Today could have gotten me in if the market was in good shape, but it's not. I've been stalking this for a few days now. So I could have gotten into this today. What triggered it? That candle over the T-line. I could really care less if that price right there is $14.61. I'm never, ever, ever, and please call me out on this, anybody that wants to. I never look at this and say, well, I'm going to wait till it gets back down to whatever the heck that price is right there. Not ever. That's a waste of time and effort for me. Another place that I could see myself getting into this is a breakout of the trap. The trap is that dotted green line and the T line. So I start to see a breakout right there. That could get me in. Keep in mind the market is garbage, so I'm not likely to do it. But that could get me in right there. Am I worried about this top? Nope, I'm not. If I'm worried about that top, simply wait till it breaks out and then trade it. But the answer is no, because this is part of a chart pattern, and a chart pattern suggests a higher move, not to be afraid. And this is your J-hook continuation chart pattern setting up. Whew. Thanks for the question, Dan. Thanks, Kyle. Take care. Hey, Aaron. How are you? Haven't seen you in a while. Hope everything's okay with you. What was that? USO. I typed in Aaron. USO. If this is the same Aaron, anyway. USO. What a beautiful chart, you guys. Look at that. So what on earth do we need on this chart? More than I have right here. And by the way, I love this. Trendicator. Trending. What more could you ask for? To have bought it down here, maybe? Yeah, you and me too. But that doesn't mean that we can't buy it here and make money on up. A nice little rally, pullback, beautiful 3/8 trap. Gorgeous. I'm flagging it. Thanks, Aaron. Gorgeous. Let's look at this on the dark chart. Look at that. That is pretty. Now let's take a look at this just using the Trendicator. Do you think we could have made money in there? Do you think you could have made money in there? That's the question. Not you, Aaron. I know what you do. Nice, huh? Let's see, Gwen. I have never used trading views. I don't think there is a limit. Oh. Yeah, TC2000, you can go back. Heck, I even put up a 500 period moving average. Let's see, Will is asking, in regards to my question about time frame follow-up, if you like the daily setup, what's your thing that makes you pull the trigger, i.e. the trigger? So I was asking if you then switch to the stock smaller time. No, the answer is no, I don't. And let's just take USO, and I'm only halfway through your question. Now I'll come back at the rest of it. But right here, if the market was good, I would have bought that today. If the market was good, I would have bought XLE today or HAL today. Those are all on the watch list. But I neglected to do it because the market is not good, and I want the market to be good. So, no, I don't look at a smaller time frame. What I'm looking for in trades are the swings, right there, the swings. So pull back right here, all of this, even a little above, all that could be an entry, and then I'm looking for that swing. That's what I'm looking for. Thanks. Now let me read the rest of your question. So I was asking if then switch to stock smaller time frame like the 15-minute, etc., to give you the time to put in your buy, put your buy in, or do you just pick a price? I don't pick a price. I'll explain that to you. Once you like the daily setup, do you set a limit and put a limit or price, or do you like? Let me show you exactly what I do. So I'm going to pull this down and right here. So let's take USO for an example. I'm going to look at USO. I'm going to buy an option. So let's go to March because I'm going to go a little bit out. First thing is I'm going to pick the month. We'll just start with March. I have no problem going out to December, but we're going to start with March. I'm going to come over here to open interest. I'm going to come down and I'm going to look for good open interest. And at the same time, my eyeballs are glancing here at the delta. So I already see the one I would want. And we'll do this. So you see the 70 delta, well, even the 73 delta. So I'm going to circle both those right there. Whoops, that doesn't show up very good. Let me try this again. Well, that doesn't show up good. Huh. All right. Got to be a better way here. There it is. There it is. Right there. Right there. So either I still did it wrong. There's your choices. Either one of those will work for me just fine. So a 55 strike or a 56 strike or a 57 strike. One's a 70 delta, one's a 73 delta, one's a 76 delta. They all three have plenty open interest. Those look perfectly fine for me. So here's what I would do next. I'll just take the middle one, 73. I'm just going to click on this, and what it's going to do is bring up the ticket. Boom, right there. Let's say we buy one contract. I'm going to make sure it's on the mid price. I could care less for getting it at 655 or anything less than 672. I'm just going to pick the mid price, and then I'm going to click buy, and the rest is history. Just like that. Exactly like that. So let me get these back and then make sure. Did I answer all your question? I think I did. Thank you, Will. Sam, deciding if it is trending or on a range and then proceed. Yeah. I don't want to trade a ranging stock. I don't want to buy a stock that's moving sideways. I'm a swing trader. I'm not an investor. So I get it if you're an investor. You know, you might buy in this area and hold it for 99 years and you're waiting for that breakout. I get it if you're an investor, but I'm not an investor. SAS. How does the volatility stop indicator compare to the Trendicator? They are completely different. Way, way different, SAS. The Trendicator is simply utilizing the volatility stop tool, but bending it to match a moving average, okay? While the volatility stop is just the volatility stop. So take USO here. Here's what we want to look for in the volatility stop really quick. Is see how we move up? See how we're flat there? That would be a good spot. See how that's flat? Actually, that one maybe not. Because this triggered that buy and that's too far away now. See this pullback? There's a volatility stop. We rally up, a little pullback here. You might argue in that one. This one here, beautiful. So that's what you might be looking for if you're using the volatility stop, is to buy close to the volatility stop. Close. That's the key. So rally, pull back close. Rally, pull back close. 3 keys. Rally, pull back close, bullish candle. Let's do that. So rally, pull back close, bullish candle. Rally, pull back close. You know what? There was no bullish candle. So unless you just bought that one, which I never would in a million years, you missed that. We're just going to go right to here. Rally, pull back close. Yeah, boy. Look at those bullish candles. Thank you, SAS. Jim, anyone using TradeStation, contact me. Trendicator version. Yes, contact Jim. Jim, did you put, how do they contact you? Jim is, he's an ace TradeStation user. Amazing, actually. I've seen that. Let's see, I noticed 2 different vol stop settings. 1.50. Hey, Bob. That is for the volatility stop. The volatility stop right here is 10 and 1.50. The Trendicator is 10, 0.10. Okay? Very, very different, but they utilize the same tool, just tweaked and adjusted to our needs. Just like the volatility stop out of the box is not set. I forget what it is now, but it's not set to 10, 1.5. This was Doug and Ed worked on this to find those numbers. That was their project, and they rocked with this. Okay, guys, I need to go. Hour and 34 minutes here. I need to jet out of here, okay? Thank you so much for being here. Seriously, if you guys want to come into the room tomorrow, I will help you set this up for anybody that has the scanner. And, of course, you all know that you can get a 14-day free trial if you want. And I do mean it's free. I'll give you the link tomorrow, unless somebody can post it in there down at the bottom. I can do that tomorrow for you. And if you guys want, I can help you a little bit with the volatility stop and setting up the Trendicator as well. Remember to get a hold of Jim there, W2JC, if you have any, TradeStation questions here, okay? All right, I'm going to check out. Thank you so much for being here. I appreciate it. Peace out, everybody. Take care.